Hi there folks, welcome to this week's weekly Forex Forecast, Monday the 1st of November. Right, in order to access this forecast, you need to go to the forexsignals.com website and then scroll down to the bottom, right down to the bottom, you'll see all our free tools and so forth. You'll see here we've got Forex Forecast, just click on that and it'll pull up our Forex Forecast. Now, if you want to get this sent direct to your email inbox, just input your email details there, and that way you'll be notified the moment it's been released. It'll go straight into your inbox, or of course you can watch it here on the actual website as well. Okay, so starting off this week, quite a busy week we've got. I'll talk more about it in a moment, but quite a busy week in terms of central bank rate decisions. Basically, it's when the central bank decide on interest rates. So we've got rate decisions out of Australia, the US, and the all-important UK at the end of the week. So quite a busy week in line for that. And then, of course, at the end of the week, we've got the non-farm payroll, the biggest event of the trading calendar. So you need to pay attention to that. But we'll talk about more about that when we get on to the calendar in a few moments. So let's have a quick look at what's going on this week. We're seeing risk on in the markets this week. Stock markets are looking reasonably strong strong across the board, hitting new highs on the NASDAQ, on the S&P 500, the Dow. General indices all pushing higher. Risk on tends to have upward pressure on the commodity currencies like the Australian dollar, New Zealand dollar, and so forth, Canadian dollar, and has negative effects on the low-yielding safe haven currencies like the Japanese yen, the euro, and of course the Swiss franc as well, although the Swiss franc is actually performing quite well at the moment. So it's risk on, so we are looking at trend continuation on that theme by continuing to buy the Australian dollar and selling the Japanese yen against it. That's one of my picks for the week. I'll show you on the screens in a moment exactly what I'm looking at there, but we've broken through some key levels of support, had a bit of a pullback into that support, puts in that bearish little pattern in there. That tells me that the path of least resistance and general bias now continues on to the downside. So I'm looking at that as well. Max this week is looking at a natural gas trend continuation up there as well. There's been some real positive price action there. Every pullback you see in natural gas, and there have been some big pullbacks, every pullback is creating a higher low, indicating that the sellers that are pushing that pullback are basically being overpowered by the buyers more often than not at the moment, which basically gives us this upward momentum that you're seeing in natural gas. And then I talk a little bit here about the central bank rate decisions as well, which is obviously going to be the key driver of most of the currencies this week. Right, we'll jump onto the screens now and look at some charts and look at the economic calendar. Come on. Okay, so let's start off by having a quick look at the momentum meter. Now, those that follow me will know that this is my backbone to all my trading in the Forex market. It basically tells me exactly what the currencies are currently doing in relationship to each other. Now, unfortunately, it doesn't predict the future, but it does tell me exactly where the money is flowing at this moment in time. And as a trend follower, I like to buy the currencies that are being bought, the strong currencies, and I like to sell the currencies that are being sold, the weak currencies. Now, this is on the 4-hour time frame. Of course, you can change the time frames, but I think the 4 hour is maybe the best one for me to use. I can pretty much see what's going on. The color code is down here on the left. Okay, so what we've got here, we are seeing continued weakness in the British pound. So the British pound now has been sold off pretty much towards the end of last week and kicking this week off in the bearish mood as well. So there's money outflowing from the pound. Maybe this is ahead of the Bank of England and you're seeing some unwind of those long positions which are driving the pound higher with the expectation of a rate hike. Now we're seeing a bit of an unwind in those positions. So the British pound is coming down. But also I want to point out here what's going on with the Japanese yen. The Japanese yen, this brown line here, that is showing a pretty defined 45-degree move to the downside on the 4-hour chart, indicating money outflows from the Japanese yen. A number of fundamental reasons for that. one, you've got risk on. Stock markets are pushing up, making fresh highs almost on a daily basis now. And also you've got the elections over the weekend in Japan, keep putting the incumbents in and basically maybe paving the way for some additional stimulus down the line, which is having a drag effect on the Japanese yen. So that's coming back down at the moment. Then you've got the strength coming into these commodity currencies. So you've got the Australian dollar, the orange line, the purple line is the Canadian dollar, and the New Zealand dollar showing a great push higher today. That is the grey line. You can see that even more pronounced if you go down to the lower time frame charts. All these commodity currencies are looking quite strong. So basically buying these commodity currencies, selling these weaker currencies maybe is the name of the game. Also looking at the euro as one of the weaker currencies, which may come under pressure this week as well. Let's have a quick look here at the Australian dollar against the Japanese yen. Okay, so you can see this currency pair has pretty much been in an upward momentum pretty much for the whole of October and even into September as well. The bias has been to be buying the Australian dollar, selling the Japanese yen. You maybe watched my video last week when I spoke about market structure. Well, the market structure of this currency pair clearly is in the 84.75 zone. This was respected as a level of resistance, pulled back, and then when we finally broke through, we came back to test that level. So I've basically drawn in here the market structure at 84.75. Any price action above 84.75 really, I think, should be considered a potential buy. At the moment, you're seeing this ascending wedge. Every pullback that we're having is creating a higher low, indicating that the sellers that are pushing this down, they are being overpowered by the buyers, and that's basically creating what we're seeing here at the moment. So we're coming into this level of resistance. The way I'll be looking to be trading this today, or certainly in this week, is if we break through this level of resistance. Often when you see a breakthrough of the level of resistance, it comes back to retest before it continues on. So I'll be keeping an eye basically on that this week, where we're going to see a potential breakout of this level of resistance for momentum bias to continuing on. We've also got, as you know, some central bank rate decisions later on in the week, which are going to affect the Australian dollar. Okay, so let's have a quick look here at the euro against the Swiss. This has been a fantastic trending currency pair. It's been a playground really for the trend followers out there. You see on my chart here, I've got 3 different time frames. Always like to use top-down analysis approach. Start off by looking at the daily chart. If I just open that up, and you'll see exactly what we're looking at here. This has basically been a structural break of support, which we saw created at the low there on the sort of end of August around the 107 level. Since then, we have basically been in a bearish momentum. Every pullback has been met with a wave of sellers creating these high wicked candles. Last week, we had this big momentum push on Friday, and quite frankly, you need to go out to the weekly here to see the next level of support, which I don't think really comes in to around the 105 level. There's not much now in the way of support until that level. Basically meaning the path of least resistance remains to the downside. Okay, so we need to drill down to the lower time frame charts to see where we are going to place our entries. You can see this has been an absolute playground for, as I say, for the trend followers. This little pullback in here in the last 4 hours puts in this bearish engulfer, again continuing to the downside. I will be looking to enter into this trend on pullbacks, and I'll be looking for any recent sort of price structure to look for my resistance level, i.e. where I'm going to place the stop, i.e. where I don't think I'm going to get stopped out. So the next structural level will basically come in around the 107 level. So if I bear that in mind as my stop zone in at around that level there, around the 107 level, I can then risk manage accordingly so that I'm taking trades on pullbacks, knowing that I've got stops below with trend continuation, stops above with trend continuation to the downside. So if the market ever does retrace above 107, that's when I'll be taking my negative short bias off the table. In the meantime, looking for entries on the way down with quite a lot of fresh air, if you like, all the way down to those lows, couple hundred pips away. Okay, so now let's have a look at the economic calendar for the week ahead. As I say, there's quite a lot of central bank rate decisions in the week that we need to pay attention to, and some other data as well. So what you need to do is head over to the forexsignals.com website. If you scroll right down to the bottom, you'll see all our free tools and so forth. Profit calculators, lot size calculators. What you need to find is the Forex economic calendar. Click on that, and you can take this out to the next 7 days. The correct way to read this, of course, is to look to the right. Anything with red is deemed to be high impact news, likely to have a big impact on the markets in that particular currency. Anything that is deemed to be low will be signaled green. I don't know if this is always that accurate, but it's certainly a very, very good guide. Okay, so first off, we have got the big central bank rate decision out of Australia, and that basically comes overnight. Okay, so we've got the rate decision out of Australia. Now there it is on Tuesday. Markets are not expecting a change in interest rates, but of course, as always, we need to pay attention to the follow-on statement. The speech gives us clues as to what they're thinking further down the line, so we need to pay particular attention to that. Later on, we've also got the RBNZ, that's the New Zealand jobs data, very, very important. Early signs of inflation, and obviously employment is dropping, deemed to be a high impact news event, so pay attention to that one, certainly if you're trading in the Kiwi crosses. Just scrolling out now to the next 7 days. Got lots of US PMI data. Central bankers love a PMI data. It's a forward-looking indicator. Basically tells you the outlook from the business leaders, manufacturing services. Are they confident going forward? Are they employing more staff? Are they investing more in infrastructure and plant and so forth? Then, of course, we've got the second central bank rate decision. That's the FOMC. That is on the 3rd. Going to be keenly watched. Markets are fully pricing in the fact that they are going to announce tapering. That basically means they're going to announce the fact that they're going to start winding back on their asset purchasing. That has an upward pressure on interest rates, but that's pretty much priced into the market at the moment. So we're not expecting any fireworks out of that. I'm more expecting to see some reaction to the follow-on statement. If they become less hawkish than maybe the markets are expecting, you may see the US dollar come under pressure following on from the rate decision, which pretty much is priced into the markets. So we'll certainly pay attention to that. Again, later on in the week, we've got the 3rd central bank decision of the week. That is the Bank of England. All these reds means you've got to pay attention, certainly if you're trading in UK sterling. Big one, as I say, the markets are expecting the vote to go 9 to say, well, actually the vote is saying here, looks as though it's 6 now to vote for unchanged. That basically means 3, because there's a panel of 9. 3 are voting for a rate change. It could be swaying either way, so it's quite a live event, so we definitely need to pay attention to that. My feeling is that if they leave rates unchanged, I think the pound is almost pricing that in. You're going to maybe see a bit of a negative reaction initially, but the pound maybe will find some support. However, if they do raise rates, I think now the way the pound's been positioning itself, you could see a big surge higher in the sterling rate, certainly against the US dollar, if indeed they change rates. But we need to pay particular attention to that, of course. And later on in the week, it is non-farm payroll, the big event of the calendar month. That's the US job numbers. We stream that live, as you know. You can come over and join us if you wish to, where we try and trade it live as well, the news event. So that's the non-farm payroll at the end of the week. But obviously it's following on from the FOMC, so the importance of it maybe not as much as in the past. They're going for up 425,000 and an employment rate of 4.7%. Okay, that's the economic calendar. Okay, so I hope you found that useful. Don't forget, if you want to make sure you get this Forex forecast the moment it's released, fill in your details there and we'll send it to you the moment it is released. Don't forget you can subscribe to the channel here if you don't already do so, and that bell notification will notify you the moment that I release the next video. Yeah, don't forget to leave a comment as well. Let me know if you want me to include anything in this weekly Forex forecast. I will do so as well. Okay, you can join us live each and every day in our daily live streams, streaming up to 6 times a day around the clock, discussing market opportunities, looking for trades, setups and ideas, teaching strategies as well. If that's not your thing, that is not a problem. I wish you a good week and I'll see you next week.